Hi everybody and welcome back to Signal Sips. I'm Dorian and I'm the digital content marketing specialist here at Signal, and with me today I have...
My name is Alice Yang. I'm the manager for mortgage origination and loan servicing here at Signal since May 2018.
And today what we're going to be talking about is home buying, more specifically the first time home buying process. And with the recent Fed rate cut, it's a perfect time to get into this topic and spill the tea on all things home buying. So first, I usually like to ask Alice if you are more of a tea person or if you're a coffee drinker, if it kind of fluctuates here and there.
It fluctuates. I'm more of a coffee drinker, but in the afternoon, I feel like when you get to a certain age, it's like you drink the coffee in the afternoon and then you're wide awake at 12 midnight. So I usually drink tea in the afternoon.
Yeah, that's totally valid. Well, so we do have tea today. So I have some options with me. I have green tea, I have chamomile, and then I also have vanilla caramel. So I don't know what your preference is.
I'll go ahead and take the green.
Perfect. I think I'm going to do green as well. I already had like 2 cups of coffee today, so
I think if I do chamomile, I'm going to fall asleep.
That's so fair.
Eventually this afternoon.
Yeah. Can you tell me a little bit about your role at Signal and your journey so far in the mortgage loan sector?
So I've been here at Signal since October 2016. And I started as a loan closer, real estate loan closer part-time because that time I just had a baby. So just started part-time at Signal. I kind of, when I look for a job, I kind of look at the environment and the people I work with every day. I think that's what really drives people and motivate people to come to work every day. And I just love Signal and how everybody is like, it's like a family environment. Everybody does truly care and about each other, and we work together as a team to achieve the goals. So really love that, and also a good sense of humor within a lot of employees. It definitely helped get the day pass very happily. So I started actually as a teller. That's my first real job at a credit union in downtown Washington, D.C. when I was in college. And then after like about 6 months, there was room for movement in career. And I decided to choose the mortgage lending department. And one of the main reasons is because I feel like in the mortgage lending is where all the magic happens, where you can help people achieve their dreams, help people achieve the American dream, actually, in buying a home, purchasing their home. And for anybody who know me and who are close with me, they know that I'm the type of person, it makes me so happy to actually make somebody's day and make somebody else happier. So that's the reason why. And that's how I started with mortgage lending. And each day has been a journey and I love it. So
yeah, I mean, I've only been here for, I think, about 9 months. So I've definitely noticed the same things that you mentioned about the environment here.
Yeah.
And I'm very grateful because this is my first job out of college that I've been able to be in such a good work environment right out of the gate. So it's definitely set the bar high. So that's good though. But, and I totally agree. I never really thought of like loan processing as helping people to like achieve their dreams or achieve the American dream. And I think that in this day and age, especially like for my generation and people my age, we're kind of seeing this shift where people feel like that's not really attainable anymore. So I think loan processing is like so important for people to understand and to realize that, you know, maybe this like is still attainable for us. And that really gives me like personally a lot of hope because I'm definitely in that kind of rut right now. So hopefully this conversation will help me as well.
Yes, I think it will. I think the main thing about choosing a correct financial institution to help you with your home buying purchase is kind of in your home buying journey is finding the right person that you work with that fits your personality and also who's patient and who's not afraid to explain to you all the steps as needed. And even, you know, there are borrowers that I spoke with that can't achieve the goal right now at this moment. Some of them I have to say, unfortunately, you know, your debt to income ratio is really high. Unfortunately, I don't think it will qualify, it will go, but it's okay. I'll give the borrowers tips on how they can work towards that. I have borrowers that come back to me after 3 years or 2 years and that can achieve the home buying dream. And I love that. So
yeah, that's amazing. It's nice that it's not just a one stop in the journey. It's kind of a continuation if you find the right institution, the right people.
Exactly. Yeah. That truly wants to help you. I think
yes,
that's where you want to, that's the type of financial institution you want to work with.
Yeah, definitely. Gotta avoid red flags at all costs.
Exactly. I agree.
All right, we've got our tea. Yay. We've got everything. Do you need sugar or cream or anything? Perfect. I couldn't find any honey.
Oh, really?
So I was very disappointed, but welcome to Signal Sips.
Yes.
Cheers. Oh, so what advice would you give first-time home buyers before they go into the mortgage loan process about their finances and how they should approach this monumental point in their lives?
Yeah, so the tips I will give first-time home buyers is definitely do your research online. Utilize everything that's online. Definitely stay away from the websites that are not very big and that are not very popular, because they could lead you false information and waste your time. So definitely stay away from that, but definitely do your research online. Actually, I don't think a lot of borrowers notice, but because it's kind of internal financial institution kind of thing, that they use Fannie Mae and Freddie Mac, but they can access those two websites, and that has so much information. It actually gives you so much information about first-time home buying, about refinance, about everything. So FannieMae.com or FreddieMac.com, feel free to visit them and click on single family or other, resources, and then just type in the search button. And I do that sometimes when I need information that I'm not aware of. Another tip I would give is to don't be afraid to ask questions to your loan officer and also to your realtor who's working with you to buy that home. Don't be afraid to ask any type of questions or however many questions you have, because mainly you want to not have any regrets or have any, unsettling feelings after buying a home. So another tip I would say is to utilize the free annual credit report, and to make sure to keep track of your credit. All the liabilities, creditor, make sure everything is accurate. And also there is awesome credit report apps that is available in financial institution. I know Signal has a great one, so yes. I use that too. So so you can keep track of your credit score and also your credit liabilities. Another tip would be don't make any big purchases. I tell this to all my borrowers when they're looking for a home. I'm like, please wait until to buy your dream car after purchasing your home and assess whether you can afford it and everything, and if you feel too much pressure. Because I think the worst feeling is you get your dream home, you get your dream car, and then every month you're like not looking forward to the monthly payment. And then you have to cut back all your lifestyle expenses. And that's the worst feeling, I feel like.
Yeah, definitely.
Yeah. So that's another tip. And also I would say speak with your loan officer about the different loan products that's available to you, and utilize the websites, even your local state or county websites, to find out programs that might work for you. That might help you in everything that you're looking for in a home buying. So that would be my tips.
I feel like recently there's been this kind of scramble for people to find a home, so they just kind of settle for whatever is out there. And I know some people might be afraid to kind of slow down and ask questions, but like you said, it's really important because this is probably the biggest purchase you're ever going to make in your entire life.
Yeah.
So it's kind of like a marriage. Like, you got to make sure that you are like 100% committed to this house and this process before you do anything. So I've definitely heard a couple of horror stories from friends who just really wanted to buy a house or a condo or what have you, and then they regretted it after.
Exactly.
Yeah.
Exactly. And I feel like that's the thing that you kind of want to avoid most, because you don't want to have any regrets. If, of course, there is backing out into this, like, of course, it's not like you're buying a home and then you can't get out. You can, but it's just going to cost you a lot in the later run. And what's the point of that if you can avoid all of this in the beginning?
Yeah, exactly. A lot of unnecessary turmoil.
Exactly. Yeah. I agree.
What are the key steps in that application process that home buyers should look out for?
So I always say, read your documents that you're signing. Of course, there are documents that you're like, oh my gosh, how do I read through this? It's pretty generic. And those you do not need to read them that well. So you can just scan through them and then just go ahead and sign. But I would say the most important document in the initial disclosure, which is sent to you within 3 business days of your loan application. And with a purchase, it will be within 3 business days of you delivering the ratified sales contract to your lender. You'll get the initial disclosure package to sign. The most important document in there, it will be the initial loan estimate. That's what's called. So a lot of good information in there that you could look at. The initial rate at the time. Of course, the rate is not locked in unless you have selected to lock in the rate right away with your lender. The APR, the list of monthly payments, including principal, interest, and also PITI, which is principal, interest, tax, and insurance. So it's like the whole package. And also the cash that you would need to bring to closing. The second page would entail all the fees that you're paying. So a lot of borrowers, they have questions, especially about the second page. I would say concentrate on the first 2 sections. First section will be the lender's fees. Every fee that the lender charges. There is different names for them. We call it the loan origination fee, but other lenders, there's processing, underwriting, closing. There's different type of fees, lender's fees. There's different names, but they all mean, if it's on the first section, is lender's fees. The second part is the credit report is pretty generic fee. There's flood certification, appraisal report, condominium questionnaire if there's a condo. But those fees are exact fees that the vendor charges the lender that is passed on to you, so you don't really have to worry about those fees in comparing different lenders. The second section mainly is title fees that you need to look at, whether they're charging you for fees that is unnecessary or it doesn't even apply to you. Definitely read into that and ask questions, because I understand loan estimate is just initial, and a lot of them, they like to, because as regulation, we have to basically disclose at a higher kind of amount, and we cannot under disclose to the borrowers. They're over disclosing, but it's good also for you to ask questions and get the details that you have questions about. So that's how you compare different lenders in the fees. And I would say the third page and the last page, I would say to see whether the lender will sell your loan, or they will service your loan themselves. So a lot of borrowers have questions about that, because after your loan is closed and funded, suddenly you get a letter after a month saying that your loan has been bought or has been transferred to servicing. So for some borrowers, it doesn't really matter, because as long as they realize they want the lowest rate. But some borrowers, for them, it's kind of like, oh my gosh, I have to change the mailing address where I mail the payments. So they sold my loan. So what's going to happen now? So it's just a hassle for them. So it depends what you will want. Are you really like loyal to the financial institution where you entrust them and entrust them only, that you do not want your loan to be sold? There is a box over there that states that whether they plan to service your loan in-house or they plan to sell the servicing to another lender. So that's a good information. Another tip would be, please submit your documents early, supporting document. Do not procrastinate on them. There should be an email or some kind of communication from your loan officer stating all the documents that's required for this loan process. I would say the reason for submitting them early is to get your loan reviewed by underwriter early. So you can find out all the things you're missing early. So you can kind of have time to go ahead and prepare for them. There's some borrowers that I dealt with that waits until the last minute, and they submit this, and then the underwriter comes back for this document about a previous mortgage or a previous creditor, and they have no idea about. They have to do their research, and which could cause them to delay their closing, which is something we both don't want.
Of course.
So that's something that I definitely recommend to borrowers, and definitely keep a clear communication with your loan officer and the loan processor. And don't be afraid to ask, what's the status of my loan? And any good financial institution would not turn you away, would not, dodge your emails or calls. They will answer you exactly what we're waiting for, whether it's the appraisal or the title binder or the condo questionnaire or something else. They will let you know. So definitely ask, don't be afraid to ask questions. We go back to, good communication is the key. So
yeah. Are there any fees in those first two sections that are negotiable by any means, or are they pretty like standard? I know you said they can't underestimate. So if they do overestimate, is there a way for home buyers to negotiate those?
Yeah, so I don't know about negotiation, but this is kind of the first two section of fees is where you kind of compare between lenders.
Okay.
With the lender's fees, each lender charges different fees, and because of the costs of doing business. So definitely compare and speak with the lender. If you really like one lender over the other, say, hey, I always say, this is my kind of motto in life, is it doesn't hurt to ask.
Yeah, of course.
Never hurts to ask. Say, hey, is this, lender's fee or origination fee a negotiable? Are you able to match this bank who's able to offering me the same rate, but the fee is a little bit lower? I mean, the worst is we can tell you, unfortunately, we cannot,
right.
And you can speak with the settlement office directly as a buyer, and you can ask them, hey, I noticed this fee. What is this fee? Settlement fee is pretty flat, so it's pretty standard.
Okay.
I wouldn't have any negotiation. I wouldn't say, because they charge every borrowers the same, just like the lender's fee. It just varies between settlement company.
Okay.
So, but you have the right to choose your own settlement company. Just with a purchase transaction, usually is chosen by the seller because they work with them or they already have the documents with them, so it's more convenient for them. But my main point is, don't be afraid to ask. Definitely ask.
Yeah, I think I've mentioned the past two segments of Signal Sips. I think we talked about this too. I'm like, my motto is, the worst thing they'll say is no.
Yeah.
I just think that's such a good motto to live by. And I'm definitely guilty of maybe not following it as much as I should. But, like you say, they're not going to, pull their offer or anything, or pull their loan agreement out from under you for any reason if you just ask a question.
Exactly.
So.
Exactly.
Yeah.
And it's always good. Knowledge is the key. So
yes, yeah. And then that way, like, if you buy another house down the road, then And,
exactly.
Yeah.
Exactly. I agree.
And then my other question was, for when you're selecting, like, if you don't want your loan to be bought by another institution or like carried over, would you recommend that? Would you recommend indicating like one or the other, or does it really just depend?
It depends on the buyer.
Okay.
It depends on you.
Okay,
I would say to all the consumers out there, I would say it depends on your preference. I know that rates are more favorable if you don't mind the hassle of them selling to secondary market and having service release. Sometimes the rates are more favorable that way if you don't mind that. I mean, don't get me wrong, I don't have against one or the other, but it's really personal preference. And it's just some borrowers, they think it's a hassle, they don't want to deal with it. But some borrowers, they're like, oh, all I have to do, they notify me away, time ahead. They give me enough time, all I have to do is change where my payment's going to.
Right. And then could you explain the difference between pre-qualification and pre-approval and what the importance of each one is?
Sure. So pre-qualification, I would say, is kind of the initial step of getting a mortgage. And when you're speaking to a loan officer, you're telling them what your income is and how much you want to put down as down payment, how much you have for closing costs. And they would come back and tell you, hey, yeah, you qualify for this, this loan that you're looking for. So if you see a pre-qualification letter, it means that based on the conversation and verbal verification of the income and assets, you will qualify. Pre-approval is a little bit different. It's more firm, a firm offer, a firm, verification in that case of your income, of your assets, and of your credit. So that's why right now, especially in the market that we're in, a lot of realtors, like, before you make any offer, before you even look at homes, have your pre-approval letter ready, because they don't want to go in with an offer and not being, pre-approved for it, not maybe finding out later, oh, the buyer can't actually afford this. So, or don't have enough assets to afford this. So with a pre-approval letter, we go ahead and, at least at Signal, we go ahead and pull your full credit report tri-merge, meaning all three bureaus credit scores, and we verify that you do qualify, and we verify with your W-2 or pay stub or self-employment tax return income, and we verify with bank statements of the assets that you have. So we do all those verifications before we issue the pre-approval letter.
Okay, I see. When you're going out to like look for a house and you have your budget and everything, is it like, how strict is the pre-approval? I'm like wondering, because I'm just wondering, like, if you're going out house hunting and I don't know, maybe you have like a budget of 380,000, but there's a house for like 400,000. Is it like super strict on that, or should you leave room for flexibility, or I don't?
Yeah, definitely. I would say don't max out on what you can afford, because it's later you're going to feel the pressure every month. Definitely leave room. I would say definitely have a range of sale prices. Don't just have one sale price. That will limit your the inventory, the type of home that you're looking for. So definitely like get a range. Like I'm only looking at purchase price, $350 to $450. Or don't have the gap that big. 100,000 or like 50,000, I think is a okay gap to have. But when you submit the application for the pre-approval, I definitely recommend you to submit to your highest limit budget. So knowing that you qualify, just in case if you find a home that's lower than that, your original budget, then you definitely automatically know you're qualified. So it's a good idea to stick to the higher end of your budget.
Perfect.
For qualification.
Awesome. Thank you. And I know we briefly touched on credit scores a little bit earlier, but can you talk a little bit about how someone's credit score might affect the process or their approval rate?
Sure. So credit score is kind of like the main point, right? You have three main points in a mortgage. One is credit score, second is your income, and third is your assets. So those are the three key factors in buying a home or refinancing or doing any kind of lending, right? The higher your credit score is, I would like to say to borrowers, is the more options you have in loan products, definitely. Because of course, as a financial institution, they like to offer a more favorable rate to borrowers who have higher credit score. Why they can do that is because with those favorable rates of the loan products, they're able to portfolio. That's mean keep it in-house and service it themselves, and with less risk. So definitely, if you have a higher credit score, it will definitely open up more options for you in the mortgage loan products that is offered to you. Another factor will be the pricing that you pay for a certain rate. This is an internal kind of thing, is LLPA that we call it, loan level price adjustment. So it's all the loan level price adjustment that is adjusted with the specific rates of a mortgage. That's what the secondary market likes to use. The lower credit score or the higher credit score, it depends how many points that is charged into a rate that you want. I've seen people with credit scores in mid 600s that get charged an additional 3 points.
Wow. Oh my gosh.
In discount points. So either you can go ahead and pay that out of pocket as a one-time fee with your closing costs, or you can go ahead and subsidize that with a higher rate. So definitely credit score is very important.
Yeah, definitely. I guess like drawing all the connections, like it's important when you buy a car, it's important when you buy a house and apply for other loans. But if you don't have the best credit score, are there any tips that you have to maybe help give yourself a little bit of a boost before you go and try and get pre-qualified and pre-approved?
Yeah, I would say definitely stay away from unnecessary pulling of your credit from different creditors, like credit cards, especially revolving credit. And also trying to not close any credit cards before you, because that could actually temporarily, I know when you're thinking, you're like, but I'm closing this, I'm not using this I'm not getting new debt. But that actually lowers your limit amount overall, how much limit that you have, borrowing capacity that you have, and actually it lowers your score, because compared to the balance divided by the total limit that you have is what they use to calculate kind of the credit score and how much room you have for movement. When you close a credit card, let's just say $5,000 credit limit, it kind of lowers that total limit that you have. So when you use that to do the division, it actually lowers your credit
Wow.
score. So, but it's only temporary. I mean, it should go back up after, 6 months to a year. I don't know the specific timing, but definitely it does lower your credit. And also, like I said, I would say definitely to make it a constant habit of reviewing your credit and making sure all the inquiries on there and making sure all the creditors on there and the balances are correct. And that would kind of like help you keep your credit in check and kind of boost and pay down any revolving debt as much as you can, of course, within your means. So,
right. Yeah. I never would have known that about closing a credit card. I know someone told me recently, never close your first credit card. And I had no idea because I was like, oh, I need a new credit card. I'll just close my first one.
No.
And they were like, don't do that.
Because your credit history is like, they also look at the tray lines where creditors, who do you have the oldest tray line with? And that actually adds up with, your history.
Yeah.
So,
wow. Oh my gosh. Well, I won't be doing that anymore then. And then I also know we already kind of touched on this a little bit, but is there anything else that you would recommend home buyers look for in a financial partner for this process, aside from what was first mentioned at the beginning?
Yeah. So my rule is I definitely find a financial institution that is upfront and honest. Honesty, I feel like, and integrity is number one in this, especially in the financial, world. Honest and upfront with all their fees that they're charging you, and also the certain rules that goes into a loan product. All the little details about the loan products and whatnot. So I like to always tell my borrowers, definitely shop around with different lenders and find the one that is most suitable for you, because you're the borrower, you're the customer. So that's you're comfortable with working with, and shop around and find the lender that offers the best rate and the best service to you. I also encourage people to stay away from financial institutions that seem pushy and also very quick in making decisions, and also making decisions for you, stating that, oh, this one is the best for you. This is a product you should go with. They should never do that. They should always, talk with you and understand your situation, assess the financial situation you're in, and ask questions and give you time to ask questions. And also then give you options. I mean, telling you what to do and also giving you the option to choose what you would like to do is totally different. And definitely find a financial institution that does that. And also, whenever you find a financial institution that it is really kind of like quick in answering the questions, and also not, very patient in answering questions, stay away, run away. That's what I like to say, because you want a financial institution to be patient in answering in your questions that you have, and also not afraid to go into details with the questions, with their answers to your questions. So definitely those are my tips.
Yeah, I like what you said about you're the customer versus like you're the borrower. I think that's a good approach to have, because you're giving me the loan, but like I'm the one who's like going to be funding it basically. So I think that's super important.
You have to be comfortable. You're a borrower, you're borrowing the money, but to us, you're the member, you're the customer. You know? And we should respect what you want and how you want to basically live your lifestyle, and have the options for you.
Yeah, and I think a lot of people do have trouble maybe like considering financial institutions can be that way, because I think there is a certain like stigma around them. But I also think that's where, like, before coming to work here, I wouldn't have really known how personalized credit unions can be and how personable the staff can be. So that's really helped me as well, and kind of like made me reflect on my past banking experiences and like who I bank with right now. So I think that's been a really key part too. And then when you're deciding between a fixed rate or an adjustable rate mortgage loan, what should be some key considerations?
I like to tell borrowers, and I get this question, especially in today's market with the rate being so high. I get this question almost every day. And I like to tell borrowers, first assess what your life goal kind of is, what you want out of this transaction, whether it's a purchase or refinance. are you going to keep the property for a long time? Or are you planning to sell it down the road? You have a goal like selling the property in 5 years, so definitely think about that, because even though the Fed have lowered the rate 0.5%, especially on the prime now is 8% currently, the rate is still high. So a lot of borrowers still, is struggling and getting through that. So I would like to say that if you're planning to sell the property in 5 years, or this is not the final home that you're going to stay in to keep for lifelong term, then I would definitely look at an adjustable rate mortgage, because first, the rate is a lot lower. I would say my rule of thumb is 1%. So if it's 1% or lower, then definitely look into it, because it's worth it. Why would you pay the higher interest every month for a fixed rate, unless you have to, unless you feel like the market is going to go up? Of course, we can't predict the market, right? But unless you have that feeling and that the market will go up. So there's no point of paying that higher interest every month when you can take advantage of the adjustable rate mortgage and paying that low interest. And something people have to remember, that after the initial fixed period, whether it's 5 years, 3 years, 7 years, when it adjusts, it also adjusts based on the market. It doesn't adjust based on whatever the lenders decide. Oh, we want it at 10%, we want it at 9%. It goes with the Treasury or the SOFR. So it depends on the market. So even, let's say, down the road after 7 years, you go for a 7-1 ARM, which means it's fixed for the initial 7 years, then it adjusts every year after that. And when 7 years is up, the lender have to send you a notification 45 days before that term is up, the fixed term is up, to give you time either to refinance or to reconsider other loans. And they would tell you exactly what rate it will adjust to. So, for example, with the 1-year Treasury bill, it has been going down, the rate also. So the rate goes down with it, with the market. So for me, I personally like the adjustable rate. It gives people some breathing room for a lower interest rate, especially in the market that we're in. But there are some people who I don't, disagree with. It's like, no, I'm conservative. I want the fixed rate. I don't want to take the chance. What if, next year the economy goes a different way and the rate goes up to 8%, So I prefer the fixed rate. And this home, I plan to stay in it for, the rest of my life, or for at least 20 years or 15 years or not. And I don't plan to, go ahead and pay, early, or pay off early. Then yes, definitely go for the fixed rate mortgage, because you'll get a good night's sleep for the people like that. And also, you won't have any, guessing later in the economy and the market. So those are my rule of thumb. Is assess your own situation, what your life goal is for this property, for this mortgage, and also choose wisely and what makes you more comfortable. My thing is that whatever makes you comfortable and not have any regrets and not, having any kind of second thought is the best choice. Trust your gut feeling.
Yeah, for sure. So like with the Fed cut recently, if someone has an adjustable rate mortgage and the Fed cut it by like 0.5%, does that mean that next year like their mortgage rate goes down 0.5%?
No, so those don't play interlace. It kind of don't cross, because the 0.5% is the Fed cut like rate, but that only goes for the prime rate. So the U.S. prime rate, usually a second mortgage, a home equity line of credit, it follows the prime rate. So it adjusts with the prime rate. But with a first mortgage, it adjusts based on the Treasury bill. So when they cut the rate of that 0.5%, you're not totally wrong. When they cut, but it won't be exactly 0.5% cut for the 1-year Treasury bill. But the 1-year Treasury bill did drop. So because of that cut.
Okay, I see. So right now the mortgage, it's like 8%, around 8%. So it's not like if you have an adjustable rate, like you said, if you had like 6% to start with, it goes all the way up to 8. It's just like based on that Treasury bill.
Exactly.
Okay, cool. All
exactly.
Right. Yeah, I think I had some confusion on that too, because I was like, why would you ever get an adjustable rate? Like, if it's gonna go up this much. So that definitely clears that up for me.
Yeah. So it's mostly for home equity line of credit.
Okay.
Because every institution, they like to use the prime rate, U.S. set prime rate, which that's what it affects. So our adjustable rate mortgage, home equity line of credit is we have a teaser 3-month teaser rate. And then after the 3-month, it adjusts every 3 months based on the U.S. prime rate. So that would affect that rate directly.
Okay, perfect. Okay, that clears that up. All right, so what are some common challenges that home buyers face during this mortgage application process? And do you have any advice that would help them work through these challenges, or maybe kind of address them before they happen?
Yeah, so definitely. So it kind of goes back, piggyback what I said earlier. Don't be afraid to ask questions. Assess your own scenario and be open and be honest with the loan officer about your current financial situation. We're not here to judge. No financial institution, loan officer, or loan processor should be judging you. So when you're honest with the financial institution and the personnel, they better understand and they can work with you and help you basically to go ahead and get this mortgage done for you. Don't be afraid to ask questions. I always tell some borrowers, they're so nice. They're like, oh my gosh, I know I have so many questions. And I was like, no, because, I encourage people to ask questions. I don't want a borrower or a member to come back later and say, oh my gosh, you didn't tell me that. And that's the worst feeling as a financial institution for lending, especially my department. This is kind of my goal, is to be able to answer all the questions and have the member walk away feeling ease, and have a peace of mind. Definitely ask all the questions. Another challenge that borrowers have is they don't understand the loan process. They don't understand each specific step and what's required. Some borrowers, they ask me, why do I need to give you a gift letter? I'm telling you, this money is from my parents,
I see, yeah.
And so kind of understand, tell them ahead. I would say encourage to talk to your loan officer ahead. How are you coming up with the assets? Or what are you doing in regards to income? Because people like to add all their income together, but later realize, oh, I can't use the overtime, or I can't use the bonus income. Therefore, I don't qualify.
Yeah.
So that's why I said be open, and don't be afraid also to answer our questions that we ask you. I promise we ask those questions for a reason.
Yeah.
We don't ask just because we're nosy. I always like to tell borrower that I am asking this for a reason, because we're here to help you.
Yeah.
And I tell borrowers and members, I'm like, we're here for you. This is the reason why we're here. So don't be afraid to ask us questions. And when we're asking questions, I do apologize. It might be bothering you, but we do have to ask to help you. Our ultimate goal is to help you. So those are some challenges. Is definitely be honest with your loan officer or loan processor about your financial situation, so we can better assist you. Because when you have surprises down the road of loan process, when you're near your closing date and realize that this loan can't go through, that's a very, very bad feeling.
Yeah.
And it will only delay your closing and delay you.
Yeah, of course.
So
do you know what the biggest setback has been for some home buyers when they get to that closing date and they realize that the loan won't go through?
Yeah, so the biggest setback I've seen is, it goes back to kind of like what you should prepare for, is that do not get new credit cards.
Okay.
Do not purchase a new car.
Okay.
While you're in the loan process, or while you're looking to purchase a home, because that would be a big setback for you. There are times where, a borrower, they go ahead and they buy a car because it's such a good deal. I understand it is such a good deal with 2.99% for 60 months or whatsoever. Or, this car suddenly this year comes in this color that you want, or this option that you want.
Yeah.
But you have to realize that is added to your monthly applications and your qualifications. So that does play a part. Unless, there is so much room for you in your income to work with that, please don't do that.
Yeah.
Wait until after you get the home.
Yeah.
And then do it.
Yeah, unless you have a lot of expendable income.
Exactly.
Yeah, definitely don't do it.
Totally. And that was I think that's the biggest challenge. And it's kind of surprise to them sometimes, because I totally understand. They don't know. They don't realize that it's going to, I'm just buying a car. I need a car, you know, but I just want to tell people that don't do that.
Yeah, just wait.
Yes, exactly.
Yeah. And then lastly, what are some first-time homebuyer programs that people can take advantage of, or that they should consider before or during this process?
So I would say I will piggyback to what I said before. Visit Freddie Mac, visit Fannie Mae's website. They have some great tips for first-time home buyers, and also a lot of good readings that will make you more knowledgeable in the home buying process. But yes, there is a first-time home buyers program with Freddie Mac and Fannie Mae that is as low as 3% down payment. So a lot of people, they're buying a home and they're like, well, I don't have 20%. So therefore I cannot buy this home. Mm-hmm. Well, that's not really true, because there's a lot of programs out there that you can, have down payment that is as low as 3%, or there's FHA loans who, some is also for people who are, their credit is not as favorable. Okay. It's not that great. You can go ahead and go the FHA route where you don't have that much down payment and your credit is not that favorable. So definitely look into that. Ask your questions, and also go visit HUD.gov. They have a lot of information about FHA loans. Also, check your local state and county websites. If you type in home buying programs or assistance, there is down payment assistance. Okay. A lot of programs that they offer down payment assistance for people who are first-time home buyers. So definitely look into that. And that will be my tips for people who are looking at different programs and different options that work for them. And also, I noticed nowadays, compared to early 2000s, don't be afraid of private mortgage insurance once it's added to your mortgage payment. Because if you have good credit, the mortgage insurance is very minimal. Okay. So it has lowered a lot. The premium, every monthly premium, has lowered a lot compared to before. So
what would that insurance protect against?
So it's basically when you don't have when you don't have 20% down payment. Oh, okay. So you have less than 20% down payment. It protects the lender. So it's kind of a rule for the lender to go ahead and have the borrower get mortgage insurance if they don't have enough sufficient down payment. Okay. So definitely don't be afraid. Ask how much would a mortgage insurance just cost for me. Ask lender, and they can go ahead and give you a quote for that. Mm-hmm.
So thank you, Alice, for joining me for this segment of Signal Sips and spilling all the tea on first-time home buying and home buying in general. And thank you, everybody, for watching. Once again, I'm Dorian.
I'm Alice.
And I'll see you all next time.
Bye. Have a good day.
Bye.